All right, here we go. Also going to do, I'm going to put this in Chat GPT and I'm going to do a summary and post it on Twitter. My God, AI technology is crazy. All right, so quickly, Elon remarks, Model Y best-selling vehicle in Europe, best non-pickup in the United States, despite a lot of challenges. Current macro environment remains uncertain. While we reduce prices in early Q1, operating margin remains among the best. Taking a view that larger volumes, larger fleet is better than lower volume and higher margin. We expect vehicles to generate lots of profit through autonomy, laying the groundwork as they perfect autonomy. Cybertruck building out versions on the pilot line. It's a great product. And a Hall of Famer delivery event in Q3 2023 is what they're going towards. Will follow an S curve. Tremendous demand for the product. A Hall of Famer. Will take time to get the line going. Radical product. Megapack, great progress. Deployment reached at 4 gigawatt hours in Q1. Strongest quarter ever. Leather factory is ramping. Autopilot and FSD, 150 million miles driven in FSD, which is such a big number. Number is growing exponentially. Data advantage no one else has. Those who understand AI will understand training data. Very focused on neural net training. Limiting factor for autonomy, continuing to ramp NVIDIA GPUs in Dojo. And then the Dojo potential is significant if they could use it as a sellable service, just like AWS, which he brought up on the remarks. It wasn't even a question. He brought it up as a remark, which was fascinating. Want to make as many cars and sell as they can. Good time to exceed the lead further. And huge thanks to the Tesla employees. And real quick, Zach, congrats to Tesla team for record production and deliveries. Autonomy gross margin and operating, this is auto gross margin and operating margin reduced but remain at healthy levels. Impacted by additional adjustments and warranty adjustments, so on and so forth. Berlin and Austin costs are also down. Storage business is starting to take shape. Approaches to grow volumes as quickly as possible. Focus on efficiency and doing things from COVID, so on and so forth. Any remarks there so far?
No, nothing I want to dive into necessarily. Anything stick out to you?
No, it's just we've kind of discussed it already. I think the Dojo thing was interesting. And there was we already talked about it. Okay, so questions. What is the process of auto pricing adjustments? Don't really want to talk about it. We do our best to take our production output to macroeconomic environments. As a team, it's a team review where this team reviews where we stand globally and can't get into details as to why we're making decisions, but it's actively managed. And then, do you still believe Tesla Energy will be bigger than auto? And then they said bigger than auto on total gigawatt hours deployed, not necessarily by revenue. Auto could be bigger. Seeing growth of energy storage well in excess of automotive. Guidance for margins on energy around 20%, just like any other program that they launch. Any comments there?
Yeah, I mean, we did kind of talk about that already, but it's a pretty interesting disclosure that we've had for the first time. The one we didn't touch on really is the gigawatt hours, in terms of sizing of the opportunity. So kind of getting back to master plan part 3, he's saying we need more gigawatt hours for stationary storage than we do for what did he call vehicles, like moving vehicles or something like that, non-stationary storage.
Non-stationary. Yeah.
So I thought that was kind of an interesting way to frame it, and I hadn't exactly thought of it in those terms before. So I think what that's implying is obviously the pricing on a dollar per kilowatt hour basis will be higher for cars because they've got seats and all the other like steel associated with making a car, but the majority of the cells will actually be for stationary storage. So kind of interesting, and I think it was a subtle reframing of the way that he's discussed this in the past.
Great. How well are 4680 cells meeting expectations versus battery day? So they established a cost down roadmap through 2026 there. They're making good progress, hoping to get near production by the end of the year over at Corpus Christi for the lithium refining. 75% utility is installed for cathode in Austin. First material by end of year from that facility. And then structural battery pack, they've seen big improvements. They do believe that the structural battery pack is a good process and it still makes sense. And Q1 was all about cost and quality, significant improvements in both areas, 50% quarter over quarter in Texas, 25% reduction in COGS over quarter, and on track to achieve steady state targets by end of year. Any thoughts there? 4680.
Yeah, I think he also, didn't he say something about like a 20% increase in max throughput out of Cato, which
I believe you're
pretty
right.
Interesting. You kind of forget about K though, because now it's all about, all right, let's get it into production. But I mean, they're at 10 gigawatt hours, I think, right? Is the capacity in Cato, and
think
I mean
so.
that's pretty meaningful too, especially when you consider the IRA credits that are going to go into those cells as well. So I mean, it's good to see that they're continuing to work on that process, because as they get that up and running in future plants, I mean, the learnings at Cato are going to be pretty important too.
Yeah, great point. What do you anticipate 2023 gross margins for cars will be at current levels? And that was a there were some really good questions on today's call, I thought.
Yeah,
Like
I
some
agree.
very
They're better than
pointed,
usual.
yeah,
Yeah.
pointed, great questions. And it was great. And I thought the answers were quite good as well, mostly. So a difficult environment, lots of macro uncertainty, set of costs we control and some we don't. Within the bucket we control, most of the costs that we're working on is around the Austin ramp and stabilizing that. Cost optimization work to get on intended volumes there. 4680 sales is a big piece. Similar story in Berlin, doesn't have 4680 as input. For that factory to complete localization is ongoing. As volume increases, more localization occurs. And then the world that we don't control, logistics, but moving in favor. Supply team is doing a great job. And then commodities are a huge hit point. It's still at maximum pain in the cost structure, but there will be more improvements in Q2, and lithium prices have fallen significantly. Let me just make sure I fix that. Fallen significantly. And then they do expect a bigger impact in the second half of the year. A lot of risk, but we have to see how the year progresses. And then, yeah. And so any thoughts there on that guidance? We talked about it briefly, but if you have anything additional.
The thing that kind of stuck out to me was just how different like the issues at each plant are. I mean, Shanghai is still kind of like the standard bearer, and frankly an asymptote that the other plants won't get to in terms of profitability. But it's just kind of interesting that they're trying out different strategies. Like localization is this issue, and in Berlin, which kind of makes sense because the whole supply chain to date has really been in like U.S. based in China. So they got to kind of stand up something there that makes sense. That would be a harder problem, but I hadn't thought about that. Then 4680, we obviously know that's a huge problem and opportunity in Austin as well. So just kind of interesting to think about the different issues at the plants.
Then the question is, how is global ordering tracking? How is it tracking? How is global ordering tracking? My goodness, why can't I do this? Tracking since the most recent round of price cuts, orders are in excess of production. And that was really the guidance we got there. Hold on, we got Chili back. We got to bring Chili in here. What's up, Chili?
Hey guys, how are you?
What's up, dude? Okay. Dude, you look good with that beard. You gotta wear it more often.
I'm too lazy. I only like to shave once a week, I guess. I don't know.
I love it. What'd you think of the call?
Sort of as I expected. I guess the business is, great. I'm excited about the long-term business. The stock, I'm worried about for the near term. But I'm a long-term investor and happy to hold through thick and thin. But near-term stock movement, I'm very uncertain, could be trouble.
What was something that really jumped out to you during the call?
Well, when towards the end, actually, there was a question. I think the Jefferies analyst or someone asked about margins again. Like, so you're willing to ask Elon to reaffirm that he'll, sacrifice initial margins for the lifetime value of the car. And Elon said yes. He reaffirmed it in the middle of the question a couple times. I don't know if you remember that part, but that just, I think they already sort of said that earlier, but I think it just really stuck it in there. Hey, we're going to have very low margins potentially initially up front, but the lifetime value is going to be huge. So it's just a question of whether I could be wrong about the stock if the market, if institutional investors are willing to accept Tesla similar to how they accepted Amazon for so many years with zero margins. How Amazon for years carried a very heavyweight valuation because they were investing all in growth and had very little or zero profits basically. And so investors looked past that and still gave it an incredible valuation. So if institutional...
The Russians got him.
We lost.
Chelly, we lost you. I think you need some more peppers in there or something. What do you think?
I did
What do you
like
think
the
of that
setup,
commentary?
though.
Oh, he's back. Oh no,
Sorry.
is he back?
Yeah.
We got Chili back. Go ahead.
Sorry, I have to put my phone on Do Not Disturb. Get those spam phone calls.
My goodness.
So, I think if institutional Wall Street is ready to accept Tesla in a similar manner as a true disruptor, not just an automaker, and they're willing to accept Tesla to have very low margins that Tesla may need to have in order to ship 500 to a million cars a quarter, which they're getting up to that. Then I think Tesla's valuation could, stay where it is or potentially go up. But unless if institutional Wall Street is not ready to accept Tesla in that way that they did Amazon for all those years, then I think valuations of Tesla is going to get crushed for the near term.
What's the likelihood that happens? How do you think about what does Tesla need to showcase for that to happen, or is it just literally up to the market to decide they want to
The
do
market. I mean, to me, it's a no-brainer. To me, I'm not institutional Wall Street, but in the eyes, if I have to put myself in the shoes of institutional Wall Street, like Gary Black, or that's how he thinks, right? And he would be the good person to ask this question to. I would say it's I don't know, less than 50-50, that there's like a sudden change in how institutional Wall Street embraces Tesla as a company. They have to fit it into their models somehow, some way. And Amazon was only a bookstore for a short period of time, and then institutional Wall Street realized it's something much more. But Tesla, to most of institutional Wall Street, is still an automotive company. I think that's the problem.
Mm-hmm. What'd you think of their sort of verbiage around uncertain economic times? I don't have a crystal ball. Did anything jump out to you when they were saying those things?
Yeah, I think that was like Matt impersonating Elon. It was Elon impersonating Matt impersonating Elon or something. I thought Matt said that line or something. So yeah, I mean, that just to me is standard Elon. Uncertainty. He doesn't know what's going to happen with commodities, and just like a non-answer answer sort of.
Mm-hmm. Yeah, Matt and I were discussing that, and I thought that was kind of a very is a way of saying recession without saying the word recession. Like, hey, the car market is suffering. We literally have to continually drop prices. We're looking at prices every single day, and we are making sure that we're marrying up our prices to production as closely as humanly possible. And we are uncertain about the rest of the year, and we're willing to drop margins to zero. Doesn't that scream recession to you? Like a pretty severe one,
I mean,
potentially?
Or that they're just not enough of the general public is educated on Teslas to be willing to pay current prices for as many as they're selling. So, you can put it that way, where if Tesla were willing to educate the general public, then, they would just take away a lot of sales from other ICE cars that are selling for $50,000 or $40,000 or $35,000. But in the absence of a major education campaign to the general public, Tesla is going to have to drop prices more to sell twice as many units as they are now.
Mm-hmm. Matt, did you have anything you wanted to add or anything you wanted to ask?
No, I think it might be good to get back through the document. I think there's a lot of good stuff we haven't kept going through yet.
So let me go ahead and do that. So what we're doing, Emmett, is I took some notes, and now we're going through the notes, and we already went through some. So we're just going to continue going. If you want to add or add any commentary, please feel free to do so. So one of the investor comments or questions was, can you give us a specs on Cybertruck? We will save that for the delivery event, which will hopefully be around the end of Q3. I'm confident in saying that it's an incredible product and a Hall of Famer. And I said, hype train, choo choo. So he's starting to really hype this thing up, which is great. Any thoughts on the Cybertruck stuff, Emmett?
Yeah,
during the call?
I think Cybertruck is the biggest way to advertise, not educate. Well, it's going to cause curiosity. That's what you need to do. You need to cause curiosity either through education or something explosively cool like the Cybertruck. So if they can start shipping, 50, 100,000 Cybertruck a quarter, That might not be till early to mid next year, let's say. Then that's when people are going to see them all over the road, and it'll kick off a ton of curiosity among all kinds of people to talk about it at the dinner table with grandparents or whatever, and that'll help bring a whole new wave of demand and such.
Matt, did you want to add anything else on Cybertruck?
No, I mean, it's a similar point to what I was saying before. So, I mean, I think it's a big deal. I think it's, potentially going to be a pretty big catalyst. So, I mean, it gets back to the same thesis that we've had that, the next 12 months are looking pretty rough, to be honest. But then the next 12 months after that I'm super excited about. So it's interesting to see, when will the market, will the market in Q3 all of a sudden start saying, hey, things are a hot mess right now, but gosh, look at, 6 months from now, things are really looking better. You could see the stock really rise in that scenario too.
Yeah. Like you might just have a really dark time for the next 6 months and then a nice rise after that. It's hard to say, or it could be a year until the stock starts rising. Yeah, it's hard to say, but I agree. There is a very bright pot of gold at the end of the rainbow if you can wait it out.
Yeah. Oh, hello. Does he have any thoughts for us? Yeah. Do you have any thoughts on the Cybertruck?
Do you have any thoughts on the Cybertruck, Gavin?
How many kids you got over there? Like 7, bro? Jeez.
3. What do you think about the Cybertruck? They think it's the best ever. Okay.
Best ever. Okay.
Yeah.
Did they do independent research, or are they influenced by their father? Can you ask him that?
Do you do independent research, or are you influenced by me? Yeah, this is me. Yes, it's real. It's real. Yeah. Yeah, there's like 4,000 people watching, I think. So be careful.
Yeah. Famous.
All right.
Your words will be locked forever. It's all good. That was my wife in the comments. She's like, oh my God, so cute. Little Emmets. It's awesome.
Yeah. They're all eating their French fries and ice cream before a baseball game.
Fantastic. Yeah. All right. Question from Piper Sandler. Lathrop, great to see growth. When do you think the facility will be close to full utilization? The comment was there are ramps at the facility with the suppliers. We should see that unlock in the latter half of the year, second phase in the second half of the year. And the follow-up was ability to serve customers out of Shanghai. Wonder what are the regions that you aren't serving effectively? And then the answer was many parts of the world that Tesla does not serve yet. Expect to open up new market throughout the world. Even though they are not gigantic, they do collectively add up to something significant. It's about time that Tesla offers its cars to the rest of the world. Any comments there?
No, I mean, I think the other thing that they were talking about at that point was the interconnect queues and how much those are growing. And I think it was kind of interesting to hear that, they're not really looking at that from a demand perspective. They're just figuring out how can they ramp supply. So kind of a similar analogy to to what's going on in the auto business, that like, they're just going to ramp up supply as much as possible. And so right now demand seems infinite, but it could be the case that, 3 years from now, we're having the same situation on the energy side that we're having right now on the auto side, where they're just all of a sudden they're ramping up supply, and the energy industry, for whatever reason, is going through a downturn. And so it's just, it's interesting. It's a huge opportunity, and I'm excited to see it ramp up though.
Emmett, anything from your side?
I agree with Matt. Yep. I'm excited to see how it ramps.
Cool. George from Canaccord, can you discuss FSD take rates given that you've reduced prices? Do you think you need to do that for FSD? No details on take rate, tricky pricing question. Value of the car that's autonomous is enormous. Price now is an option value on the autonomous vehicle. I think we will do FSD release later this year. And I put an LOL at the end because I think it deserves it. And then the follow-up was EV commodity prices. Do you think it's a reflection of overcapacity in supply? And then there was a lot of commentary around this. I wish I had a crystal ball. Can't provide an answer. We are in uncertain times. Guess is stormy economic weather for the next 12 months, provided there are no major geopolitical wildcards. Things get sunny around spring next year. And then EV material targets, most are not super liquid. Fluid, maybe, I meant to say. Single percentage is traded. Oh, I'm talking about, what is this? What am I talking about here? There are large price swings in EV material targets. We are seeing softness in lithium carbonate. Could take advantage of low prices for the rest of the decade. We have contracts in place with previous pricing. Because of the price spike, companies are becoming more ambitious in finding places in Africa and South America. And then on the lithium front, the choke point is on refining versus mining. Lithium is very common, and the sort of same verbiage around, hey, like we just need refining capacity versus mining. Any thoughts there?
That last part we've heard ad nauseum over the last year or so.
Yeah.
So no, I still wish they would explain that a little bit more than they have to date. But it's not unexpected. We've seen commodity prices come down. Just how those translate into the earnings or the cost of goods sold will be interesting to track over time.
Thinks about it
Emmett,
with like forward contracts and such. Yeah. Can you hear me?
Yeah.
Oh, yeah. I'd be curious to see what Jeff Lutz thinks about that comment. I gotta go, guys. I gotta go. But thanks for having me on again and listening to you guys while I'm driving my kids. I'll talk to you later.
Of course, man. Way to prioritize your kids over us, bro.
Yeah.
Wow.
I don't do that. Look, I'm here. My wife's single parenting right now.
All right.
As many kids.
Emmett's a better person. Take it easy,
All right,
Emmett. Thank you
guys.
for jumping in.
Bye.
Appreciate you, brother. Bye. That's great. See, that's how you are you have a good dad as an example there, Matt. Learn something. Jeez. My God, what a terrible person. Oh, man. I really do wonder how many people think we're serious. I hope nobody does. But I know some do on Twitter. It's very obvious. It's actually kind of very entertaining. Emmanuel from Deutsche Bank.
Pricing population collapse. So thanks for screwing over humanity.
For now, give us a second, bro.
Okay.
Just wait. You'll see.
I just know Cindy saw those kids, and we might be seeing many Farzads, 9 months from now.
Well, we don't know if that's a good thing or a bad thing yet. That's why we haven't decided if we should get cracking or not. Emmanuel from Deutsche Bank. Pricing strategy. Tesla feels it's worth maximizing volume and fleet, able to monetize this over a full life cycle of the vehicle. Can you be more specific? And so they kind of describe this robotaxi terminology can be confusing. It applies to the next generation vehicle. They internally call it the robotaxi. But here, actually, I forgot to mention this at the top. This was huge. I think this is the first time we actually heard this guidance regarding full self-driving. All of the vehicles that have Hardware 3 will achieve full autonomy. Model 3 and Model Y will be a robotaxi. Current hardware can achieve full autonomy. What did you think of that verbiage?
Yeah, I think we did touch on that at the outset. That was a pretty big announcement, because that was something, the whole Chuck Cook B-pillar question was, it seemed like a pretty reasonable stance that you'd need a kind of hardware 4 and maybe even like a hardware 5, because it seemed like hardware 4 wasn't the big retrofit that some people were expecting that it would be. So, I mean, they obviously have looked at this in tremendous detail. And if they thought that there was a problem with the placement of the cameras, I absolutely believe they would have just come up with the hardware 4. It would have been very easy to just say, yeah, look, we thought hardware 3 would work for full autonomy. It's going to be a great ADAS system. It'll get you from A to B. It'll be like an FSD that will work, but it's not ever going to be autonomous. Like, that would have been a fine solution. Like, there wouldn't be legal action for that. I don't think any sticking legal action for that. But the fact that they're pretty convinced that they can improve the cars with just software is pretty impressive, I think. And the massive economic implications too. I mean, this is where he got to my absolute favorite line of the night. He was saying how at the point at which you can turn an existing car into a functioning robotaxi, the utility just increases exponentially.
Yeah.
And what I've just said is quite profound, and I don't think most people realize it. That was my favorite line, like a little humble brag, like what I've just said is so profound. No, that wasn't even it. It was the profundity of what I've said is quite remarkable. It was profundity. It was like chef's kiss on that. It was great.
Never change, Elon, if you watch this for whatever reason.
Yeah, no, never. I mean,
no one else says that. No one else says that.
But it's like so true. Like, that's, I mean, back in 2019, when I kind of went all in on the stock, I was like, yeah, you know what? Like, nobody thinks that this is like possible to like retrofit existing, not even retrofit, just software update, boom, you're like your
Switch.
Car increases in value 4x or something like that at no cost to Tesla. Like, the margin implications of that just completely staggering. That thesis is still out there. It's just that most people are still not ascribing it any value.
I think what's fascinating, I'm starting to really wrap my head around is like I think I now understand why people don't give that any value is because Tesla does set ambitious targets and they do miss, and they do
Yep.
miss, and they
Yep.
miss, right? And but the important ones come to fruition late, and the really important ones come to fruition in just insane gang, like 500,000 by 2020, insane, right? So, but I can see why I can see why that sort of narrative has taken hold, because 20% margin, 47,000 ASPs, nope. A
Yeah.
full self-driving ready by autonomy by feature complete by the end of 2022, nope. But it's ambition. It's not giving you a false promise. It's like they're ambitious, and
Yeah.
they just miss, and it is what it is.
Yeah, and I think if you go back to that Elon Musk series on Wait But Why from, I don't know, when was that, like 2014 or 15 or something like that.
Yeah.
I think Elon at the time was saying that they were going to have the first manned mission to Mars in like 2018 or something like that with the
Right.
with the BFR or something like that. And it's like that was a wildly optimistic goal. They've learned a
Yeah.
lot, but look now, tomorrow we're going to have the first orbital launch of
How
the
crazy is that?
Starship, like this like massive thing that he's been talking about for a decade. It's finally going to become realized, now. And so, yeah, he massively missed the timeline of something that's so disruptive that it doesn't really even matter that the timeline's been missed. So,
Right.
yeah, it's just the size of it kind of dwarfs any misgivings I have about how bad of a prognosticator he's been around timing.
Yeah, for sure. The one thing that always sticks to me that was told to me when I was a pharmacy tech when I was going to school, to college as my part-time job, it was, do you want it done now, or do you want it done right? And I was like,
Yeah.
wow, that was very profound. It was, the profundity of that statement was quite amazing. So
Were
I
you
learned a
high at
lot.
the time?
No, I wasn't.
Oh,
Wow,
a
I'm so
double
blown away.
rainbow.
Dude, throwing it back. That's a big callback. Double rainbow guy. All right. Follow up on the 20% gross margin. Sort of excuse me. So follow up, that 20% gross margin was reasonable given the guidance that we're giving at the end of Q4, but macro has changed. What else has changed? Is there a floor? And so the guidance was about half the miss is attributed due to adjustments in the second half of the quarter. That lowers the floor. Made adjustments in Q2 as well. The other half of the miss is attributed to things that are non-recurring, warranty adjustments, so on and so forth. And then there's two macro factors that are tricky. The biggest one is the interest rate. If there's high interest rates, it's equivalent to increasing the car or the price and less affordable. Another factor is when there's uncertainty, people will generally postpone big new capital purchases like a new car. If people are reading about layoffs, they might get worried. There's a slowing economy. Nature of the auto industry goes through cycles. Any thoughts there?
No, I think that's kind of similar to a lot of the stuff that we've already hit on. So I don't think we need to rehash that necessarily.
From Bird, many fish to fry.
Baird.
Dojo. How do we Baird? What is that? Bird.
You said
From the
bird,
bird.
and you wrote beard.
Beard.
I think
How
it's
do you? How do you?
BAIRD.
Jesus Christ. BAIRD. Baird.
Yeah,
Baird.
not BAIRD.
Oh my God.
And an A
was
is
gonna
the
say
one
English.
that's like an O with a little foot.
Thanks. I was
Yeah.
gonna say English is not my second language, which is not. But this, I don't think. I guess is that an actual word? What does that even mean?
No, it's a name of a company. It's
Okay. Thanks.
Yeah.
Thanks, Professor. Appreciate that.
I'm a finance guy, so I know that.
Many fish to fry, like Dojo. How do we rank this versus the rest of the business? So they look at it as a long shot bet. If it pays off, it will pay off in a very big way in the $100 multi-billion level, which is something we discussed earlier in the call. But put in a long shot category, take it to the bank. But the banks, don't take it to the bank. And then he made a bank joke. Also big believers in heat pumps and homes, but those are background items. They focus very much on vehicles, autonomy, and stationary storage. Solving the stationary, I don't know why they didn't tell me. Solving sustainable energy and autonomy is a huge focus. If Tesla can solve autonomy, the biggest value asset increase in history. And then the follow-up was around pricing, losing share, gaining share. How does Tesla look at pricing versus EVs or ICE vehicles? This was actually sort of reiteration of how Tesla really thinks about why they're doing what they're doing. Every day, Tesla gets an update on how many cars were ordered versus produced. They have likely the most real-time data for their cars. Tesla knows how many were ordered
Just like I
yesterday
said.
through the. Yeah, just like you said, it's very true. You call that to the freaking T. Tesla knows how many were ordered yesterday throughout the world. The finger is on the pulse. There's no latency. Adjusting course every day. Decisions are pretty good. Sometimes they are dumb, but on average, it's better than the rest of the industry. And then as far as EV market share goes, a lot of the public debate is on this concept. Tesla doesn't look at it that way. They look at it as the car market. Mission of the company requires ICE to be switched over. Any thoughts there?
No, I mean, I did think it was funny that they basically said, like, we're tired of like you guys looking at it wrong. We've been telling you for years like it's the whole car market, not the EV market. So like, do your job right is basically what they were saying. I thought it was pretty funny that wasn't even Elon, I think, that said that. It was
somebody else.
Yeah, it was somebody else. I'm not
I
sure.
think it was Lars or somebody else. It may have been Lars.
Yeah,
I can't remember.
It was just kind of funny seeing, one of the, sub Elon people being so like testy with
snarky
with the analysts. Snarky. Yeah. It's like,
it's
great that they feel that comfortable to kind of, push back in that way. I think it's good. I like to see that just in the depth of bench, like we saw on Investor Day, just having, so many people that are comfortable in their own position to not be afraid that they're going to say something that'll get them in trouble.
So true. It's funny because Elon wasn't snarky at all in this call, and
He
a
wasn't.
non-Elon person was snarky.
Yeah,
I like that.
That's flipping the script for sure. Yeah,
I love it. Progress. See that? Come on now. Can you talk about the cost structure? This is from Oppenheimer. Can you talk about the cost structure that is available on cars? And then again, they would like to have a crystal ball, but they don't have it. Depending on what scale you're looking at, most of the car cost is variable. We've started seeing improved costs from suppliers. Some of that has flown through lithium production, commodity pricing. We're very focused on the metrics, and other things like reducing air expedites, so on and so forth. And then around stationary storage, can you talk about the volume of quotation that you're seeing and how many are converting to actual sales? They're not really looking at it that way. They're engaged in ramping Megapack as quickly as efficiently as possible. And this is not a product call, but we're making improvements. I don't know what that means. Making improvements on how quickly you can connect Megapack to the grid. And so that was sort of like, this is not a call for new products. I think this is not a call for new products, but making improvements on how quickly you can connect the Megapack to the grid. Any thoughts there from those?
Yeah, players? I mean, it was kind of interesting because I would have loved to hear a data point about like, since the IRA passed, we've seen like a 30% uptick in orders or something like that. I think that's what they're trying to get at. Tesla's kind of in this spot where they don't have to give that level of detail. I mean, they've got a 3-year backlog. I mean, they can just say, all that matters is production, and that's a fair answer right now. But I just anecdotally or just out of my own curiosity, I would have been interested to hear, if they did see some kind of spike after the IRA passed.
Cool. Goldman Sachs, do you still see 2 million as a goal, and is 1.8 million supply or demand constrained? These are volatile times. Again, production standpoint, if things go well, shot at 2 million. That's the upside case. They feel comfortable at 1.8 million. Have to see how this year unfolds. And then in Investor Day, opening up the charging network, what are you hearing and how is it ramping? And then there was a comment about how they opened their first V4 in Europe, supercharger, and the Magic Dock in the US, heading towards universal compatibility for all vehicles in all major markets, balancing ability to serve current customers versus new customers. And this was an interesting data point. 50% of superchargers in the EU are all EVs, and 0 increased in wait times. So they've essentially, that's a pretty significant data set there. Any thoughts around this?
No, it's kind of interesting. I think they said in the deck that this is not like a big cash cow for them, but they're seeing some incremental margin. I was actually surprised with the margin of the services business overall. I was expecting that to kind of revert back close to 0% gross margin, but instead I think they made around 100 million of gross profit on services. So that's like a nice little adder. And to Elon's point earlier about trying to get all their lines of business to that 20% gross margin, that certainly applies to the supercharging as well. So it is small right now, but it's going to be kind of similar to what he was saying about adding all the different geographies. Kind of helps increase demand overall. And I think when they start ramping up all these other parts of the business, it's like, 200 million here, 100 million here, and you start ramping that up, and that starts to make a somewhat meaningful impact in the financials as well. So I'm just kind of glad to see services progressing better than I thought it would.
Cool. Wolf Research, leveraging cost position as others struggled and lifetime revenue. Can you give us a sense on how far you'd be willing to take this? Are there brackets around a range of initial margin? Any color you can provide on updated margins, updated range of margins? Difficult to say what the margin will be. Depends on the macro, what macro dictates. If the Fed were to lower rates, that would be great for demand. I'd be very optimistic about middle of next year into next year. Important to invest in 2024 and 2025 today, using cash generated to invest back. Caution, don't read too much into recent quarters. Macro is very uncertain, kind of saying that the economy's poop was my verbiage. They didn't say that. And then the follow-up was long-term revenue. No, they did not. They did not use the word poop. Okay, yeah. Not very. That would be very professional. Long-term revenue of the company is massive. Sounds like you would be comfortable with a lower margin, and Elon said correct. So in a recession, pricing elasticity deteriorates. How do you view it in this context? And so cannot emphasize enough the question of affordability. For most people, it's all about the monthly payment. Banks are not leaning forward to provide loans these days. Tesla is in a uniquely strong strategic position, only ones making cars that they can sell for zero profit for now and yield tremendous economic in the future through economy. If they chose to do that, it is extremely significant. So, the profundity of this statement that came from that. Any additional color there you want to give?
No, I think we did already touch on that point. So yeah, it's I am extremely profound, and I wish more people would listen to me.
All right, we're down to the last three questions. So from Morgan Stanley, hi everybody, good luck tomorrow with Starship to Elon. Now that you know Twitter really well, what can you tell Tesla shareholders about X or the super app? And then the very brief comment, it could potentially make it easier to buy cars. Kind of out of topic, there's probably some benefit. The follow-up was, back in 1913, Henry Ford introduced assembly line concept. Car costs fell 70 to 80%. Is history repeating itself? And then Elon said, we're not trying to take pricing actions to undermine competitors. We don't think about competitors that much. Do people like, we think about, do people like our cars? Can they afford our cars? We do have a unique strategic advantage. Possible to sell at zero profit with net future cash flows and service and charging and insurance. We want all EVs to succeed too. We're trying to be helpful. We want to help them in any way we can. Any thoughts there?
No, I mean, I thought it was good. I mean, if he came out and like, yeah, we're trying to crush the competition, I mean, that would not be a good look. And frankly, we all know it's not true. I mean, it was kind of a silly question. If you're following the company closely enough, you know that from the beginning, that's never been their goal. So, yeah, I mean, I did think, Adam Jonas had actually watched a couple like videos like from Connecting the Dots. I know was doing some Highland stuff, connecting it back to 1913 or whatever it was. So it was kind of interesting to hear that comment, but I don't think we got any kind of useful tidbits from Elon out of it.
Yep. Second to last question for Barclays. You're ramping supply at Austin and Berlin. Help us understand how critical it is to ramp those factories in current macroeconomic environment. And then there could be a macro shock that is so severe that folks stop buying cars. But in the absence of that, we will continue to grow output at a rapid clip. And then the margin at Berlin, margin drag until intended volume. Can you remind us of margin profile of Austin and Berlin versus Shanghai? And then I think this is the first time we got this guidance. Probably won't be as good as Shanghai, but we expect to make significant improvements in Austin, Berlin, and Fremont. We'll continue to increase our localization efforts. What do you think about that?
Yeah, I think we touched on that one a little bit earlier too. Actually, the Shanghai kind of being the standard bearer and the asymptote that other plants are going to get to. So, I mean, that was something when I was thinking about my modeling. It was like, oh, you saw how huge the margin improvement when they ramped Shanghai was, but that was when you're going from Fremont, like the worst, to Shanghai, the best. But now you have this like weighted average portfolio of production where you've got Shanghai and Fremont together kind of like setting this blended rate, which is, I don't know, probably close to like 20-21% now with his price cuts. And then Berlin and Austin are kind of dragging that down a little bit. So even once, like if Shanghai right now is at, I don't know, 26 and Fremont's at 18 or something like that, what they're saying is, we're never going to get back to the 30% range essentially that we had last year, unless the whole macro changes pretty significantly. So yeah, I think that's going to force some changes to the kind of modeling that people are doing, and it makes sense.
And then the last question from Jeffries: we should look at Tesla in terms uh, of auto market share. Is there a limit to the direct business model? Should we look into different ways of offloading inventory? And then Elon's guidance was seems to be working well so far. We're always going to have growing pains depending on the geography. It's helpful to have feedback with service. We feel the pain and know how to change the car so it needs less service. Best thing for the customer is no service. And then the follow up was um, fair amount of profit comes from service parts from legacy. Would Tesla think about doing that? Elon went on a tiny little rant before the end of the call. People don't understand that the reason incumbents succeed is because they have a large fleet and are able to sell new cars at close to zero margin and sell spare parts at very high margins. The only way to succeed for a newcomer is to succeed for a newcomer is to offer a car that is so compelling they have to pay a premium over incumbent cars. In absence of EV and autonomy, a newcomer cannot succeed. Any feedback there? Anything for?
Yeah, I mean, I thought these questions were both kind of dumb, honestly. It's like, oh, I could have really used a Pierre Farragut to round it out.
Yeah.
Like, okay, like these are not meaningful questions. I think, like, no, we're not going to do a dealership model, and yeah, we don't have a service business model that's really meaningful. And yeah, that was a problem for us, but we overcame it. So I think the interesting thing is not the question so much, but like their kind of response of like, yeah, the only way for, so we know like legacy is dead. They kind of established that. But the only way for a newcomer to succeed is for them to offer something so compelling or that's autonomous. And they also said that the only way to be successful in autonomy is to have a massive data set, which nobody but Tesla has. So it's like when you start putting the pieces together, it's just like they are just a wrecking ball in the industry right now. And I don't know how any other company survives, or maybe they survive, but at like 1% gross margin or something like, or not gross margin because you can't survive at that, but 1% net margin. So I don't. It's just if I'm just taking my investor hat off and just watching this as a business story, like I want to pull out the popcorn and just watch how this unfolds over the next 5 years, because I have a feeling it's going to be bloody, and I have a feeling it's going to look a lot different 5 years from now than it looks right now. And I think that's what that answer was kind of getting at, is like, this is not going to end well for a lot of people.
Yeah, I couldn't agree more. I think it's going to be very important to separate out, especially for the next 9 to 12 months, Tesla the stock and Tesla the company, because there's a potential that there's going to be a pretty drastic decoupling. But I think as Tesla continues its mission forward from a very good financial footing, with lessening margins for sure, but with enough cash flows to subsidize the business growth at their targeted 50% year over year on average, and bringing out the Cybertruck and bringing out the compact car and building out Giga Mexico and building out Berlin and building out Austin and building out Shanghai, and developing full self-driving and ramping up energy, and they can still add cash to the bottom line, or at least stay even, while everyone else loses sales and they continue to grow. How could you not like that company? And so the question becomes, what is the market going to give it from a valuation perspective? And that's really the $1 trillion question, is like, how is the market going to value this business into the next year or two? So I'd be interested to see, man. It's very interesting times. It does really seem like Tesla, the company, they are very much firing on all cylinders, I think, in the respects to really fulfilling the mission of the company, which is to advance the advent of sustainable transport and getting costs as low as humanly possible and going down that cost curve. It's just we're in this weird time where profits will suffer because of it. And we also have a macroeconomic environment that is very much recessionary, in my opinion. So, yeah,